Hey guys, hope you're doing well out there. Time to take a look at shares of Shopify Incorporated, ticker symbol SHOP, after they reported their Q4 results, sending shares down nearly 13.5% on the day. We'll walk through the top line revenues and bottom line earnings. We'll also take a look at their Q1 2024 outlook that they just provided. We'll walk through all the financials, and really the overarching message of this video will be the fact that while these results that Shopify just posted are fantastic, they come under the context that this company is still valued at $115 billion, and in my opinion, pretty wildly overvalued considering the results that they just posted. Now, we'll also take a look at it from a chart perspective and highlight some levels where I think Shopify can find some support from a technical perspective, and where really I would be looking to be a buyer in shares of Shopify. As always, if you're new to the channel and find this type of content valuable, be sure to hit that like and subscribe button below. It would be much appreciated. Shares of Shopify down nearly 13.5% on the day, eating into some of those one-year gains of roughly 83%. Now, at the top of this video, we are mentioning this is a company still valued at $115 billion. And so as we walk through today's numbers, keep that valuation in mind. We are also taking a look at their New York listed shares. So all these figures will be in USD just to avoid any confusion. Now, revenues coming in at $2.14 billion. That was good for 23.5% growth. Year over year, did beat estimates on Wall Street by roughly $70 million on that top line. Bottom line, non-GAAP EPS coming in at 34 cents a share. That beat estimates, which were closer to 30 cents. So it beat both on the top line and bottom line. You have two different revenue segments over at Shopify. The first one being Merchant Solutions. This is a much larger business unit comprising of roughly $1.6 billion of the $2.15 billion of total revenues. That grew at roughly 21% year over year. And then you have a smaller Subscription Solutions revenue segment that is growing at a much faster clip at roughly 31%, but again, makes up just $500 million of their total revenues. We'll break down these two revenue segments in just a second, but first, taking a look at their Q1 2024 guidance, they expect revenues to grow at a low 20s percentage on a year over year basis. Seeking Alpha has this updated at right around low 20s percentage, and that would represent a revenue figure of roughly $1.8 billion. Again, this is for this upcoming Q1. As we look ahead to the other quarters in 2024, they're really expected to grow in that mid-teens percentage, declining as we move along in the year. So you can expect somewhere between 15 to 20% top line growth over at Shopify for the full year 2024. Now, as we spoke at the top of the video about the two different revenue segments, we'll first take a look at Subscription Solutions. So revenues at $525 million. That was good of 31% growth year over year. The beautiful part about this business segment is its margins. You take a look at the cost of revenues on this subscriptions unit at just $97 million in terms of cost of revenues to generate north of $520 million. You take a look at the margins on that. We can do the math. We take 1 minus 97 divided by 525. You're looking at a business of roughly 82% gross margins. Now, those are fantastic gross margins, very software-like margins right there. And that is something that's very desirable over on Wall Street. The only thing is, this is a very small revenue segment over at Shopify. For a full year, you see just $1.8 billion in subscription revenues. Again, this is a company trading at $115 billion. So just their subscription revenues making up $1.8 billion, not as big of a unit over at Shopify as really we would like as investors. Now, their other business segment, Merchant Solutions, makes up a far bigger portion of their overall revenues, but the margins on this business not nearly as nice. We take a look at $985 million in terms of the cost of those Merchant Solution revenues, and then we divide that by the actual revenues generated in this quarter. We're looking at gross margins of roughly 40%, just under 40%. So you have a business segment that's making 40% gross margins that contributes a much, much larger portion of Shopify's overall revenue. And then you have a faster growing business segment at nearly 80% gross margins, but again, is a much smaller business unit. And so what that does is we come down to their gross profit of roughly $1.06 billion of gross profit. That's off of $2.1 billion of revenue in this most recent quarter. So you're looking at gross margins of right around 50%, the majority of that coming from your 40% gross margin business of Merchant Solutions, and then just a little bit from your Subscription Solutions business at 80% gross margin. So as a potential investor over at Shopify, what you want to see is them growing their Subscription Solutions revenue faster, and maybe, hopefully, even one day get to a point where the Subscription Solutions revenue is a bigger portion than the merchant solutions, or at least the same size, just because the margins on this business is far higher. And so that will lead Shopify to command a greater and a higher valuation in the marketplace moving forward. Now, keep in mind, a 40% gross margin business as your main business, still fantastic. There's a ton of companies on Wall Street that would kill to have a main business doing 40% gross margins, and then on top of that, a side business doing 80% gross margins. But keep in mind, this comes in the context of Shopify at nearly a $115 billion company that's doing right around $3.5 billion in gross profit for the full year. So all of this comes into the context of a massive, absolutely massive valuation. And over at Shopify, what you want to see is these revenue numbers getting bigger, is subscription revenues growing faster, and frankly, faster than maybe just 30% because of how high margin it is. Now, the story doesn't end over here at $1.06 billion of gross profit for Shopify. To drive those top line revenues, you have a sales team, you have a marketing team that you have to pay. You also have engineers over at Shopify doing the R&D. That expense actually ticking down on a year-over-year basis. So that's good to see Shopify controlling those R&D expenses while still being able to grow their top line revenues. You also have some back office expenses, again, ticking down substantially on a year-over-year basis. So Shopify doing a good job controlling these operating expenses. But again, when you come down to your operating income of right around underneath $300 million for the last quarter, and then for a full year, you're not profitable on your operating basis, largely due to an impairment on their logistics business. But even if you add this $1.3 billion impairment back onto their full year loss from operations of $1.4 billion, you're basically sitting right around break even from an operating perspective for the full year. And then at just $300 million worth of operating income in the most recent quarter for a company valued at $115 billion. Yeah, either this valuation has to come down significantly or Shopify has to grow substantially into the existing valuation. One of those two things needs to happen for this company to make sense really from its current valuation. We get down to net income in this most recent quarter coming in at $650 million. Last year, you were at a loss of $620 million. And so when you compare Shopify's numbers to itself a year ago, yeah, they look fantastic. You have nearly 30% top line growth on one business unit and then another 20% on your other business unit. On top of that, you have operating expenses actually declining, and then your net income absolutely turning around from a loss of 600 million to now a gain of 600 million. But keep in mind, all of this comes into the context of their lofty $115 billion valuation. And for a company that's basically break even on a full year on that net income side, is a $115 billion market cap really justified? That is really the question you have to ask when you come in here and value a company based on its financials. Their net income from an EPS perspective looks fantastic. Again, flipping from a loss now to a profit. And so this company is certainly making strides in the right direction. It's just either those strides need to continue or the valuation needs to come down substantially. You're also seeing some dilution on your shares based on the weighted shares outstanding, that ticking up just slightly year over year. Now, from a balance sheet perspective, this company is still looking fantastic. You're sitting on roughly $6.2 billion worth of current assets. From that, you're at roughly $5 billion of cash and cash equivalents and then marketable securities. Total assets coming in at right around $11.3 billion. That is up from a year ago. And then you're not having a ton of liabilities at right around $1.3 billion. So you have quite a bit of cash and cash equivalents over at Shopify. They can look to do maybe tuck-in acquisitions depending on the regulatory environment. Probably can't do major acquisitions, but tuck-in acquisitions here and there certainly possible over at Shopify. Not a company that should look to do a buyback, in my opinion, anytime soon. And they're really not in a position to pay out a dividend. So those acquisitions and really investing back into themselves is how I see them using that cash. Now, in terms of the statement of cash flows, you pull down nearly a $650 million net income figure. Again, that's positive net income. Last year, you were at negative $620 million from a loss of income. On your full year 2023 net income, you're basically right around break even, which is still, again, a huge step forward considering in 2022, they lost nearly $3.5 billion of net income. You get to add back some light items. What I like to see is stock-based compensation actually ticking down year over year. You see now down to $98 million. Last year, you were at $142 million. Despite your net income turning around in a pretty substantial way, you're paying less in stock-based compensation. That is something that I consider a pretty big green flag. On top of that, You had a $1.3 billion impairment on their logistics business that was for the full year, so it didn't affect this most recent quarter, but did affect their full year cash flows. And so you get to add that back to full year free cash flows of right around $1 billion. You round this up to a $1 billion figure. And even from that perspective, they don't have a ton of capital expenditures. And so even if you take your operating cash flows to be roughly in line with your free cash flows, you're sitting at a number right around $1 billion for a company valued at $115 billion. So you're paying roughly 115 times free cash flow multiple on your 2023 free cash flow figures. So still a company, in my opinion, wildly overvalued and has to see a pretty substantial drawdown in order to make sense from a valuation perspective. But all things considered, these cash flows looking fairly strong. They don't have a ton of use in terms of investing back into themselves or doing capital expenditures for this cash flow. And so the majority of that, either they get to invest into other businesses like acquisitions or get to just add back onto their cash pile that they continue to grow. So from a balance sheet perspective, from a cash flow perspective, this company still looking fairly strong. It's still looking like they're turning their business around from really losing money now to becoming profitable. But this company has a long way to go in order to grow into their lofty valuation, at least considering where their income from operations currently stands. Now, from a stock chart perspective, this one has been absolutely rocketing higher. Did see a drawdown today, roughly 13.5%. I think the first level of support for shares of Shopify is near $70 a share. I think this one is coming back down towards $70. That would be a drawdown roughly of another 8 to 10%. And so if you're absolutely dying to get into shares of Shopify, I think this is your first level to get into shares. But you do want to set a pretty tight stop loss, I would say, at this level, because if Shopify breaks this $70 range, I think it is coming down south of, we'll call it $60, somewhere between $57 to $50 a share. This is really the range where I would be interested in picking up shares of Shopify. Between these two green lines is where I would be interested in accumulating shares of this company. From a valuation perspective, I think that drawdown of another, call it roughly 20-25%, would make a lot of sense. From its recent highs, that would be a decline of somewhere between 30 to, call it 40-45%. I think while that seems like a pretty steep drawdown, this is a volatile name that can see large rallies and large declines. Also, from a trend line perspective, a decline down to levels of south of $57 would also make sense. From this lower trend line, it would come back and sort of retest it depending on how fast it comes down to these levels. Certainly, if Shopify never sees these levels again, then will I miss out on a stock that could potentially rally further? Yes, absolutely. But again, for a company that is priced at $115 billion from a valuation perspective, again, also priced at north of 13 times on a price to sales and nearly 84 times a forward price to earnings, missing out on a company that is valued pretty steeply, in my opinion. I certainly wouldn't be overly concerned about that. I think this stock really has a better risk reward within this $50 to $60 price range, in my opinion. Your first level is still sitting at $70, and then below that, call it $57 a share. That is really where I would be a bit more aggressive and look to step into shares of Shopify. That was my take on Shopify Incorporated. While these results, again, were fantastic compared to a year ago, while they are making all these strides in the correct direction, from turning to a loss from operations now to an income from operations, this company still has a long way to go to grow into their current valuation, still north of $100 billion. Let me know your thoughts on this one in the comment section below. Are you coming here, picking up shares of Shopify on this decline of really 13.5%? As always, thanks so much for listening, and I'll catch you guys in the next video.